Manish Sonthalia, Motilal Oswal AMC joins us live. Manish, good to have you back on ET Now. Thank you for joining us. What do you want to start with, Infosys or horrible set of IP data?
Whatever you decide to start with.
What do you think will have impact on markets today?
Nikunj, I think all these negative data are known that when the whole world is, or the whole Indian market is playing the long dollar short equity trade, some of that is getting reversed, and the reversal has not yet fully happened. So, these negative data points, I mean, you know about them. It's not that it is coming as a negative surprise and people are hit negatively on the sentiment side.
Okay, a bit of a problem with the audio there, but I think the point what Manish was trying to communicate, and loud and clear, even though his audio was poor, is that a lot of bad news is already in the price. The fact that rupee will have a negative impact on earnings, it will stoke inflation, Reserve Bank of India will not cut rates. That's in the price now, and a lot of times when a lot of bad news is in the price, sometime when news is out, markets, they don't react. Similarly for Infosys, the consensus was that they will cut guidance, they've not cut guidance, and then you got a surprise that led to short covering, and then brokerages have re-rated the price. So it's really all about trying to judge what is in the price and what perhaps is not in the price. But trading ideas, do you want to recap them?
Oh yes, let's just quickly bring in Mitesh Thakkar as well on board and talk about what his trading calls for the day would be. Mitesh, what is it that you've identified?
See, I think a couple of stocks which are showing strength would be on the buy list. AV Nuvo is a buy. Wait for the stock to start trading above 1052. That's where some kind of intraday breakout takes place. Buy then with a stop at 1032 for targets of 1085. BHL is a buy with a stop at 182 for targets of 200. Century is a sell below 246. Keep a stop at 252. Look for targets of 235. IDFC is a buy with a stop at 132 for price targets of 140, and a sell on Mahindra and Mahindra with a stop at 925 for targets of around 875.
Manish, we lost you there when you were making a point that, look, a lot of bad news is in the price, and the fact that IP data for the month of May was not strong, I guess that's not a big surprise.
Yeah. I think that, when a negative data point hits you, you tend to take it in your stride, and most of them are known that manufacturing is collapsing, inflation is still high. You saw the CPI numbers, they came in higher than estimates, and still the markets went up. So the whole world is actually playing the long US dollar short equities trade as far as India is concerned, and some of that is unwinding, and we are not fully done with that. And that is what makes me feel that the markets have still some way to go on the upside.
Okay, Manish, hold on to that thought. Just a minute and a half left to go before we kickstart trade for this Monday morning. So let me just recap what Ashwini Gujral's thoughts are. He's recommending a buy on Cipla, Pidilite Industries, as well as Rallis this morning. He's also got a buy call on L&T, Siemens, as well as Emphasis are all buy calls. Sandeep Agle then, he's got a buy call on IGL, Tech Mahindra, Escorts, Reliance Power, and a solitary sell call on Maruti.
50 seconds, let's get one idea each for the day from our experts. Ashwini, your number one idea.
So you'd like to go with the Pidilite or Rallis. Both are having fresh breakouts. Particularly Rallis has made a nice base, and now on the back of monsoon, etc., it's beginning to move up.
Mitesh?
I would choose a long on Bharti.
Long on Bharti from Mitesh. Rallis is something where Ashwini is recommending that one should go long. Rallis, because of good monsoon, is one stock which surely will be on everyone's radar. 20 seconds to go. If I look at markets, how Indian markets moved in last 3 weeks, well, surely they've surprised everyone on the upside. But now is the difficult part, and the difficult part is that we are nearing the top end of the range, and we need a further catalyst to really go to break out of that range. IndusInd Bank numbers, Infosys numbers, they are great, but the rest of the earnings season will be rather noisy. It is not a good start, honestly, and when I say it is not a good start, because this is certainly not in line with what Asian markets are doing and what SGX was indicating. SGX was indicating that we would start with a touch of green. We've started with a touch of red. We've cracked below 6,000 on the Nifty. So it will not be easy for markets really to consistently generate upside momentum if news flow does not improve. 33 points down for the Sensex, 15 points down for the Nifty. Infosys also seems to be correcting, 2765 for Infosys now. That's a solid cut of nearly 1.5%. Let's look at key individual stocks, starting with TCS, HCL Technologies. Then we'll move on to look at petroleum OMCs, which is HPCL and BPCL, where a petrol price hike is at play. Axis Bank, HDFC Bank, and Reliance Industries. These are three Nifty 50 companies which are due to declare numbers second half of the week. And ahead of those numbers, none of those stocks are trending up very nicely. So Just Dial is up, Infosys is down, Reliance is flat, and HPCL, BPCL along with IFC, key oil marketing stocks, are off to a decent start.
You've also got XI, TTK Prestige, as well as Oberoi Realty, which are slated to come out with their earnings. So let's just keep a track on these names as well. You've got petrol prices which have been hiked. IOC, HP, BP in focus. Let's see. All these names have started off well in the green. Crumpton Greaves says not to start buyback on July 15 due to SEBI observations. So watch out for this one as well. And Tech Mahindra and Polaris are the two stocks that you would want to look out for, because Tech Mahindra may buy Polaris's IT services business. That is what some of the newspaper reports are indicating. Polaris has gotten off to a very good start. 4% up in the green. Tech Mahindra is the other one, which should just come up for you on your screens. Let's see what the high flyers from all of last week are up to. The likes of United Spirits, you've got Hexaware, Wipro held out very well in Friday's session. United Spirits, soft start there. Hexaware starts off well in the green, and Wipro as well is seeing a good build up, up 1.5%. TCS is the other one which you would want to look out for, considering it almost seems to be a pair strategy when it comes to both TCS as well as Infi. Book out of Infi today and buy into TCS. So while Infi is lower by about 2%, TCS is just about nudging the green line right now.
Not a very powerful start, a flat start, nothing special in any of the key large cap stocks. Handful of 8-10 stocks are doing something special, that's about it. Manish, for markets to keep on going higher, you need a constant and constructive positive news flow. But given the way or given the kind of macros we are working with and the kind of earnings which are expected to come in the next 2 or 3 weeks, what will really generate upside momentum?
No, I think post Mr. Bernanke's comment about continuation of the stimulus program, I think it is the liquidity which is going to keep on flowing. So you will see more inflows by way of ETF, which will generate the beta in the market. So it will be the same old index odd names which will tend to move higher. So what is going to change is the liquidity factor.
What about Infosys then, Manish? I mean, has the stock hit a ceiling after the first day move of 12-13%?
Yeah, I mean, numbers were good, but one cannot really extrapolate these numbers into the next quarter as well, because we have seen the wild gyrations which Infosys sees quarter on quarter. So, and the management has also indicated that they are cautiously optimistic, but what they have delivered in the first quarter cannot be extrapolated into the second quarter. So, having said that, I think for FY14 at around these valuations, it appears to be more or less fully priced at around 28,100 crores, unless and until we see some revisions on guidance on the upside or the currency depreciates further, which changes the opinion for FY15, etc. I think for the next one quarter, this 2,700 to 2,900 should be the band in which Infosys should trade.
What about the rest of the IT pack? Are you more hopeful of a better performance when it comes to TCS, and more importantly, a steady stock performance as well from the likes of a Tech Mahindra, TCS, or for that matter, Hexaware as well?
I think TCS should outperform Infosys both on valuations as well as performance. So if Infi has come out with such great set of numbers, then TCS should somewhat do better than Infosys. And if that was to happen, then definitely TCS should also move higher from the current prices. So I think the growth trajectory for TCS is clearly better than that of Infosys. But that same cannot be said for Tech Mahindra. I mean, yeah, they're doing okay, and now the merger has taken place. So I don't really see too much of a re-rating on Tech Mahindra from these current prices, unless until we see the performance improve at the blended level, both Satyam and Tech Mahindra put together. The telecom environment continues to be very weak, and that is bulk of the business. So let's see how Tech Mahindra reports numbers, but there is no scope of valuation or prices to earning multiple expansion for Tech Mahindra.
Manish, three sectors where markets currently are hiding in are A, Pharma, B, IT, and C, some would say consumer names. Whereas for pharma and IT, because of weak rupee, numbers will be strong. But do you think because of a weak rupee, it could be a tough quarter for large cap consumer names because they are also dependent on palm oil and other important ingredients?
See, commodities in the international market have corrected, but the benefit of that may or may not be seen as far as raw material prices of consumer companies in India are concerned. We got to look at consumer companies from the point of view of price elasticity. Where there is less price elasticity in demand, then those companies will tend to do better because they will have pricing power for their products. They'll raise prices and cushion the impact of raw material price increase in rupee terms. So I think the FMCG basket as a whole should tend to do better because there you have relatively less price elasticity in demand. Whereas the other consumer discretionary names, we're already seeing that in autos, volumes are coming off a cliff, and some of the other names also you would see, the top line actually not growing and there being a pressure on margins. So it has to be a case by case basis, but within the consumer space, clearly it would be the FMCG which should still deliver 15 to 17, 18% sort of a profit growth for this quarter.
Manish, you specialize in the mid-cap space and your fund, the next $1 trillion opportunity, has done rather well. So tell me a bit about your fund. What are the 3 holdings and what do you like within the mid-cap space?
Yeah, I think the fund has done well. It is a 5.5-year-old fund and returns have been quite good. In fact, the absolute CAGR returns over the last 5.5 years has been 12% when the markets, and we launched this fund at the peak of the previous bull market. So markets are still down and have not achieved the levels. They are not even at par, but this fund has delivered absolute returns at 12%. So 1 rupee invested in December 2007 is worth 1 rupee 80 paise today. So I think the key main things that we follow in this fund is basically buying to structural names rather than focus on cyclicality in sectors, and look out for companies which can generate ROEs of 20 to 25% and companies which can double their profits in 3 years. So we have just stuck to this philosophy all along and it has worked for us. I think some of the names that have done well for us, Page Industries, it's now an 8-bagger from an initial buying price. We have a Glaxo Consumer, which is almost a 1-bagger, Eicher Motor, which is a 3-bagger. So some of these names have done well and that has helped the fund perform to whatever levels it has achieved till now.
What about frontline auto names though, Manish? Because that's where seems to be the crux of the problem is. I mean, pick up any issue and that seems to be, currently ongoing, be it a labor unrest, production slump, as well as, sales data as well, sort of petering out. Is it time to avoid the frontline auto names right now?
Yeah, each of the auto names are actually going through their own set of problems. So whether it is JLR, it is to do with China's slowdown, and now there is skepticism that JLR volumes may not be as strong as what was being thought to be previously, or Maruti, which is, in spite of yen depreciation being felt, is not seeing the volumes come off and consumer disposable income is taking a hit on actually volumes on the passenger cars. The same is the case with automobile. So the short-term blip is there, you could see some valuation correction, but the outlook for the medium term continues to be quite good, particularly when monsoons have been very robust. So second half of this year, as far as rural India is concerned, motorcycles should see a dramatic increase in volumes. So if you want to play for the second half, then I think the two-wheeler space would be best positioned. Unless and until things improve as far as the overall economy is concerned, maybe passenger cars would remain slightly muted. And HCV is a huge supply being excess in demand, and that has directly to do with the economy. So long-term trajectory is okay. Medium term, I think two-wheelers should do better than the passenger cars.
If we recovered on the Nifty, that is important, that we are falling less and we are gaining more. All declines are clearly getting gobbled up, and clearly it's the dip buyers who are once again dominating Indian markets. Manish, so let's look at your core holdings. Page Industries, iShare and Glaxo Consumer. Now, they are expensive stocks, and one would argue that they are some of the most expensive stocks listed on Indian stock markets. So you own the most expensive part of Indian stock market. Why is that?
That is the dichotomy, Nikunj. Quality comes at a price. We know that, and some of these names that we have are very high dividend-paying companies. So, there is a correlation between high dividend payouts and high prices to earning multiple. So, prices to earning multiple is basically mathematically you can derive this is basically your payout divided by your dividend yield. And dividend yield on the market or the particular stock always remains at anywhere between 1.5% and 2%. So if companies are paying out 75-80% as dividend, and you have a 2% dividend yield, the justified prices to earning multiples stand at anywhere between 35-40. Having said that,
are you happy to pay this kind of a premium? You don't think there is a bubble in these expensive consumer names, because names like Nestle, Glaxo Consumer, Page Industries, they're trading at P multiples of 30 plus?
they are not in a bubble zone. I am very clear about this, because the earnings growth will take care of the valuation. We are looking at trailing earnings. You're talking about, let's say, 40 times on a Page Industries, but what about the growth? The company is actually doubling its profit every 2.5 years. So 2 years down the line, valuations at around 20-25p for a 50% ROE company and a 50% payout company.
Okay, Manish, good having you on the show as always. Seem to be having a bit of a crackle in that audio. Let's quickly revisit what the market is up to. While it's been a quiet start for the frontline indices,